Welcome to Stock Watch with me in Tauleng Lechela, and joining me to unpack your stock-related questions today are David Shapiro from Sasfin, Securities, and Schalk Louw from PSG Wealth. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Schalk, David, thanks so much for your time today. Maybe let's start off with markets action. What's driving markets action? What's fueling some of the positive sentiment we've been seeing? I mean, we've really recovered from those, April 2nd losses. What's fueling that? Are investors optimistic that there'll be more room for negotiations when it comes to tariffs, David?
Yeah, I think we're learning to read Trump. He makes these outrageous demands on tariffs and then pulls back. And I think that's what's happening at the moment. Suddenly there's 50% on copper, 200% on pharmaceuticals. Last week it was, 20% across the board. And I think we read him. He can't really go with that because the damage that he'll do to, first of all, the global economy and his own economy, we won't get out of it. So I think the market's beginning to price in, okay, we're going to get 10 to 15%. That's where it'll settle. We're happy with that. And that's why markets are getting on. And I think the next focus is now on the Fed, that we'll finally start to see rates coming down. So overall, there's a very stable tone in markets, which I can live with.
And I mean, today was supposed to be D-Day. We were supposed to, get some clarity when it comes to tariffs. But here we are dealing with new threats. David mentioned, the 50% tariff on copper and the potential 200% tariff on pharmaceuticals. Just your a sense of what's playing out in markets, Schalk?
Man, it's just crazy. I mean, David, so firstly, I agree with you. I think Mr. Market is starting to get the playbook. But I mean, it's just, I was thinking last night, we're sitting not even 6 months into President Trump's second term. Not even 6 months. And I mean, just look at what has happened, what he's done, what he said. I mean, things he said, things he's done, friends he's made, and suddenly friends he does. I mean, it's just unbelievable, what has happened. But I mean, I agree. I mean, if he came out in April and he mentioned, as you said, let's say it's going to be 10% tariffs across the board, the market would have most probably take it very negative if it stayed that way. Now suddenly, we're sitting on the 9th of July, the D-date, as you mentioned, and we're looking at a 10% tariffs as a massive win. I actually think Mr. Market will continue to run if we hear that this is where we'll be settling. So what is that, Sun Tzu, The Art of War, that book, his favorite book, President Trump's favorite book, it says you go out and you go out very quickly, and you go out aggressive, and then you sort of make friends again. And you can see this has just been the same playbook again, all over.
And I mean, I've been saying,
So, if you look at 50% tariffs on copper, how can the American economy handle that? And how can exporters? There's no ways, because copper is used in every element of manufacturing, whether you're building or construction. The amount of copper that's used, suddenly you're putting up copper 50%. You say, okay, yes, there are manufacturers or processors. It's not the raw copper; it's a processed copper in America. But could they handle the demand that's going to come and handle them? It's impossible. So I think people just say, okay, they snooze past it. I can't see any other way of explaining why the markets just move on.
It just seems to be shrugging everything off.
Impossible. Sorry.
You know what? I've been saying it's Trump's world, and we just live in it, unfortunately.
Never a dull moment. Never a dull moment.
Sticking with commodities, we are seeing a pullback in some of the other metals. We saw a pullback in gold and PGMs today. And just on the yellow metal, a question here from a viewer asking whether the pullback in prices presents a buying opportunity. I'll give that to you, David.
Oh, me first.
Yes.
No, I think I think it's a selling opportunity. I really think we've probably seen,
Yeah.
coming back to the stability in markets and the way their markets are handling all of this, and
Yeah.
people preparing for better second half, a much more stable. We've probably seen I think we've seen the weakness in the dollar, and I think we've seen the height in gold and so. That doesn't mean we're going to see a collapse. I'm not saying this is going to suddenly fall into an abyss. I just think we're going to bumble along sideways and eventually drift down. So like most markets, they have this incredible run, and then they have to digest that movement. So I would, I wouldn't be quick to rush into those markets.
Yeah. And what about you, Schalk? Are you, taking profits, or you entering that market, nibbling, holding onto more?
Okay, so firstly, just the T's and C's out of the way. I am a holder of gold, so I've been a lover of gold for many, many years. So it's we need to look at the theory behind gold, why one should be holding. And just firstly, just stating, I do agree with what David has said. If we do see some stability, and we're seeing some stability, and we see continued stability in markets, in politics, geopolitics, then naturally, I agree. I wouldn't be rushing into gold, but one should remember why you're holding gold. You're holding gold because you're looking for safeguarding, safe assets. And I think recently the dollar has shown that it's been under pressure, where gold has been sort of a safe haven for this political unrest. I don't know. I don't think that the political environment, I don't think Iran and Israel is over yet. We know for a fact that Russia and in Ukraine is still very much at it. And while that is the case, add to the economic environment, with the big beautiful bill, what that's going to add in terms of the deficit, and also the US debt, further debt levels. I want to start seeing the US repaying these debt, not making new debt. And for that reason, I would hold some gold. And just again, finally, I'm not betting the farm on gold.
Yeah.
I just think that gold do justify let's call it a percentage in your portfolio. So in weakness, I would most probably be a accumulator of some gold at lower levels.
And Schalk, how are you holding that? Are you, holding it through ETFs, any of the local gold miners?
Locally, we're lucky. David, you and I, we've been on the floor when we were at a JSE board, which I think most probably the total third of the JSE board were all gold miners. Today we've got 5.
Funny how things have changed.
But but still, looking at these five miners, still, it's way more than a lot of countries do have. So I do like our local counters, your likes of Gold Fields, Anglo Gold. They're doing well. Internationally, I like Wheaton. Not going to go into Wheaton, but I think for the general investor out there, to go and buy a GLD gold ETF, or if you want the miners, do a gold miners, something like a Van Eck gold miners ETF. That's always let's call it a safer option if you don't want to commit to one company.
All right, so I'm going to throw a different question to you then, David.
I must ask Schalk if he remembers ASA, American South Africa Vessel, which is on Wall Street.
Oh.
Yeah.
And that was a favorite. We always that held all the big miners at one stage. I don't even think it's worth a few $100 million today. But when he mentioned Van Eck, that was also a very well-known gold fund back in the days when we used to have 40, 50 different gold miners quoted. Yeah.
Okay.
I think we don't have a lot of news, so I might digress and go down memory lane with you.
That's okay.
But we were on that floor, and you would literally hear unrest. And the first thing you usually do, above let's call it the door, the boards, where there was a digital screen, and that digital screen had only 2 things on it. It had the gold price, and it had the rand dollar value. And you could immediately, if you felt this uneasiness on the JSE floor, it was never something like an APSA or you can always look now, either the gold price popped or dropped by 1% of 7, or the rand weakened, and then you could just see, I mean, these let's call it gold traders were just going mad on the floor. But anyway, our times have changed. 5 gold mines left.
All right, then, David, just a different question for you before we head into the break. A viewer asking for your insights on a Rhodium ETF, in particular the One Vest Rhodium ETF on the JSE.
I have no idea. I've watched the platinum price very carefully. I watched the palladium price very carefully because, and platinum has done incredibly
really
well. What drove that up, I have no idea. I think it was a switch. Gold having run up 30%, I think platinum was always ahead of gold. It was always more expensive than gold. And I think that a lot of investors, speculators, whatever you want to term, decided, listen, there's a massive gap. Let's go into platinum. For whatever reason. Also, if you're a gold jeweler, platinum jewelry almost looks like gold, is a much cheaper option. But still, 30% is brilliant. So, but I'm not sure of rhodium, or all the other IUMs and that. So I couldn't call that one.
All right.
I'll be able to help. I'll be able to help.
Yeah.
I'll be able to help. So I think, an interesting factoid. I mean, we the largest platinum producer, just to add, largest platinum producer in the world, with the second largest palladium producer. And to the viewer's question, we're the largest rhodium producer by a country mile. I mean, by far, it's something like 60% of the world's rhodium. Now, rhodium is an interesting metal because it's basically made when you make mirrors. It's a shiny metal, very similar to your other PGMs. So, and we know that price action over the past few years was unbelievable. Went from a mid let's call it 2015, 16, round about these levels, went up to close to $30,000 per troy ounce, and back to these, call it 5,000 odd troy ounces where it's currently trading. So I think it very similarly trades with the other PGMs. It's a very luxurious one, and I think at current levels we've seen some upward trend in price action.
David, I'm going to throw the tech question to you then. Viewer asking for the panel's take on Meta's push into wearable devices. I'm sure this is probably on the back of the reports of Meta taking a minority stock in the Ray-Ban owner.
Well, I know that. I don't know whether that's going to make much of a difference, but it does open a lot of opportunities for them. I mean, with those wearables, when they're going to come into fashion and really be ubiquitous and people use them, I don't know. But for other reasons, I like Meta. People don't like Meta. They don't like Zuckerberg. But you've got to hand it to him. He's actually steaming ahead or moving ahead of his competition in terms of the adoption of AI into his services and that. But this is something new. The one thing about them, and I think this is something you have to bear in mind, they've got the kind of money to expand into all kinds of other areas like wearables and that. They're not stretched for R&D, they're not stretched for finances and funds to do these kind of things. For me, I'd love to walk around and be able to look at you and know your exact profile, how much money you got, what you're wearing, so on. I think from an AI perspective, can you imagine walking around a busy city or on the beach or something?
Yeah.
Lots of.
I think it's too much information at one time, David. Like, you're now seeing everything in real time. At least with your phone, you can put it down.
Yeah, no, I know. That's what I'm saying about wearables. Like, what am I going to do with all of this?
Too much information. Let's get your take then, Schalk. I mean, one person that we know for sure doesn't really like Zuckerberg at the moment is Sam Altman, because Zuckerberg has been taking all his employees.
Oh man, let's not go there. I mean, these friends of Trump, the Zuckerbergs, the Elon Musks. I mean, it's a totally different story. Yeah, I agree with David. I mean, There's the Meta has been in the forefront of innovation. Read an article last night about Apple. I mean, Apple recently, I mean, and again, it's a great company. It's done extremely well. It's also one of the largest companies in the world. But you haven't seen the amount of innovation over the past few years coming from Apple, compared to the likes of the Metas, the Nvidias, even the Alphabets or Google. So yeah, I do like Meta, and yeah, they cash generative, so it's good.
Okay, let's move over.
No,
Yes.
forget those glasses. Here's Eva. Can you imagine sitting here with those glasses? You ask us a question about some obscure company, and I just rattle off there the chart, the numbers, and that. Hey,
The PEs.
it's going to make us a lot smarter in the future.
It would make us a lot smarter. But on the road, imagine you're driving, imagine you're walking, and all this information is just coming through. I don't know about that. All right. Let's look at some of the telcos players, Vodacom in particular. Is it still a good investment at the current share price? And what is the reason for the upward trend the last couple of weeks, Schalk?
Yeah, so firstly, I mean, I don't want to go for that. There was more buyers than sellers, because then I think a few viewers will jump on me. But that's effectively been the case. We've seen up to let's call it the end of May, and what I usually like to do on a monthly basis, I like to look at some of these trends. I would take our banks and put them relative against, or price movement relative against international banks, and do this with other sectors. The one thing that stood out like a sore thumb was our local telcos, how they underperformed. And when I say underperformed, seriously underperformed their international counterparts. So we've seen that reversion, and an aggressive reversion to such an extent. And when we're talking about the gold counts, we're talking about PGMs being some of the top performers this year. Hell, do not take away our telcos. MTN is still one of our top 10 performance for year to date. On the JSE, and Telecom is just outside the top 10. So Vodacom, they've got the added bonus now and I'll chat about Remgro a little bit later. How they now the Competition Commission now the deal has now been approved, and I think it's a good deal. I think that they're definitely going to create some jobs. I think fiber is definitely a way to go. I like it more for Remgro, but that I'll discuss a bit later. But I do think this is good for the likes of Vodacom. It shows some innovation, shows some. These telcos have been net sellers of assets and not buyers. It's good to see them buying and backing themselves.
And, talking about net sellers, we saw what's been happening at Telecom. It seems like, that turnaround strategy is starting to bear fruit. The mobile data unit really soaring ahead. And does it, at these levels, does it present a cheaper opportunity to get into the local telcos space, David?
When you look at the pure results, there's nothing brilliant about them. I mean, they're good businesses. And MTN as well. MTN got a lifeline from Nigeria, allowed them to increase pricing and so on. I always go, I mean, when you see a Vodacom set of results, there are just tables and tables and tables of numbers, which are almost impossible to digest, but it's an essential service, and I think this deal is going to do them a lot of good. It's going to allow them to expand in another area. Would I buy it? I'm not sure. I like the trend. The trend has come from a very low level. They're creeping up. If you've held them for 10 years or 5 or 6 years, you're finally getting your money back, or heading towards getting your money back, which says a lot. But I always marvel, and I say this week after week, I say the one thing about Vodacom is that they provide a service that we don't want to pay for. We need it, but we don't want to pay for it. We want someone else to pay for it. We want Starbucks to pay for it, or we want whoever to pay for it, our own company as well. But they need, these companies have also got to find some other angle in which to improve the services that they offer. They're very, very good, but I haven't seen that yet.
Okay, let's.
Yeah, I agree. I totally agree because they've got millions and millions of customers, ID numbers of people on their books. I mean, I would like to see them use that, create new products. I mean, I think the likes of these telcos had an unbelievable opportunity to go into banking services a
Yes,
few
I was
years
about to
ago.
bring up the fintech offerings.
Yeah, for sure. We've seen it with Capitec. Capitec now going to the inverse direction. Say, well, we can just
Yeah.
provide data very similar to what an MTN. Now, that's what I would like to see our telcos do. If they're not going to do that, then I agree. I totally agree with then it's a dinosaur. I mean, people do not want to buy data anymore. They do not want to buy call. So eventually, I think it'd be a dinosaur. This, like I said, it's positive move from Vodacom. At least they're buying into service, which I think is going to be along for very, very long, namely fiber.
All right. Unfortunately, we have to go into your stock picks. Let's start with you, David.
I'm going for Visa, and on the basis of what Schalk's saying, the one thing about Visa, it's ubiquitous. You know, you can go anywhere in the world and use a Visa card, but I think we're going into an area where rates are coming down. We're going to see more, certainly in the US. We're going to see it continuing in Europe and that. And I'm in the belief that we're going to not a great growth phase, but we're starting to pull out of some, when we came in introducing the show and going through all the issues that we've gone through from wars, I think we're going to have a much more peaceful second half where people start to spend. So I like Visa. I just think they're very good in the area, in payments area and so on.
What about you, Schalk? What are you hanging your hat on today?
Yeah, I'm going to go local yokel again. I think you can't go more local than Remgro. Go Remgro. No, it's just, I mean, looking at the recent playbook coming from specifically Raynet, one tend to ask the question, couldn't Remgro possibly be next, where we start seeing these assets being sold? We just heard, how the Vodacom, how that merger has now been approved. Discount to NAV still trading at 41%, so that's a very, very wide discount. And when you look at the past 15 years, average discount for Remgro was around about the 22% level. So I do think that the wide discount is still justifying buying into a Remgro. And then it's like that shampoo. It's like a 2-in-1. I mean, you buy one share and you get so many other great companies like Mediclinic, First Rand, Outsurance, RCL, all those things. So yeah, I'm going Remgro.
Remgro for Schalk and Visa for David. Gents, thanks so much for your time and joining me today. That's all from Stockwatch. Thanks to my guests, David Shapiro from Sasfin Securities and Schalk Louw from PSG Wealth. Up next, The Close. Stay watching.